Back to the charts with Big Boss Crypto, and today we'll give you an emergency update regarding the upcoming Shemita crash with the recent CPI inflation data news, and we will give you bottom targets for Bitcoin, bottom targets for the traditional stock markets for the S&P, but the most likely top target for the DXY, the US Dollar Dominance Index. So without further ado, let's look at the charts. Alright, so from the news today, we see that the US CPI inflation data is still at 8.2%, and that is a very, very bad sign for the markets, as so very volatile selling action on Bitcoin and stocks. And this is super bearish because it basically shows that the Fed's attempts to handle inflation is not working at all, as it still remains at around 8.2%. And they have stated themselves that they are ready to do whatever it takes to stop inflation, even if it will make people lose their jobs. And to be honest, ladies and gentlemen, this is no surprise at all, as we have been warning you for over a month now for this moment to occur, as we have done multiple videos over this called Shemita cycle, where every 7 years the financial markets crash shortly after the Shemitah holiday. So if you want to learn more about the Shemitah and the theory behind how it works, please look at the video on the screen where we cover everything in depth. But in short, we are 99% sure that we are about to see a collapse in the financial system the upcoming days. Alright, so if we look at Bitcoin on the weekly chart right here, we see the price is struggling to hover above its June wick, which was right about 17,622. So, what are the upcoming targets from a bigger macro perspective to the downside? Well, as we explained in the videos before, the market maker, the big institutions, and the whales basically they only look at liquidity and price imbalances on the charts with big candle gaps. So, for instance, if we look at this candle right here and this candle right here, basically these are big candlesticks that have giant price gaps. Why? Because there is a lot of juicy liquidity they need access to in order to fill in their orders, because otherwise they can't. And basically they do this by in order to trick us retail investors and to basically buy the best coin series for cheap, while all the retail investors are exiting the market. And we expect these candle gaps to be filled further down to the downside. If we look on the weekly time frame right here, we have a candle on right about 13,791, one at roughly 9,208, and worst case scenario, the bottom one right here at around 5,360. So the question is then, what will be the most likely bottoms for Bitcoin, the bottom for the stock markets, and what will be the top for the US dollar dominance index? Well, we explained this in depth in our Shemitah videos and actually got banned twice on Twitter for revealing this to you. Are we being censored? I don't know. It's only our beliefs. But anyway, I'll summarize in short for you guys right here our targets and why we strongly believe that our market areas will be the bottoms for Bitcoin, for the stocks, and for the US dollar dominance index. Alright, so we have something called the 1.618 trend based fib target. So basically, what this means is if we take our trend based fib extension from the April high, summer lows to the all time high, we have a technical target to 10,672 roughly for Bitcoin for the trend based fib target. And then I wrote something called the high liquidity area. And basically, if we go to the weekly time frame, zoom out on the weekly time frame, and on this area, if we look at the indicator right here, right under, we have unfilled candle gaps right here as well on multiple occasions with the help of this PVSRA indicator, which basically shows unfilled candle gaps with a lot of liquidity. And these are the price areas that the market maker and institutions and whales are watching. And then we have something called 1.618 fib target. And if we zoom out again on the monthly time frame, take this out, draw a regular fib extension from the summer lows to the all-time high. And then we have a 1.618 regular fib target at 3,964 roughly. And combining this, all of these factors, as well as the weekly sports that we showed you before, basically we strongly believe that this price area will be the bottom area for Bitcoin. All right, moving on to the S&P, we got something called the 1.618 trend-based fib target. And what that basically means is if we take our trend-based fib target from the all-time high, the low, and the lower high, we got a 1.618 trend-based fib target at around 2,413. And then I wrote something called the golden pocket target and the 0.702 target. And basically, if we zoom all the way out on the monthly time frame from all the way back to 2009, market 2009 bottom for a regular fib extension to the all-time high. Let's see, there we go. And then we got the golden pocket target at around 2,252 to 2,078, and our 0.702 target at 1904 roughly. And basically, with these fib targets, these are basically strong fib resistance areas where price wicks from immediately. And then we also have, if we remove this one, hide all the mess, we got on the monthly time frame, on the white line, we got the monthly 200 EMA, which can act as strong support, as well as on the weekly time frame, on the purple line, the weekly 800 EMA as support. And finally, on the weekly time frame right here, if you look at our indicator, all the way back in March 2020, we have a high liquidity candle that is yet to be filled. And basically, this area is a high liquidity area, and we strongly believe that this will be the bottom area for the S&P. And finally, moving on to the DXY, we wrote that the key resistance area will have a likely top in between 128.80 to 144.59 roughly. And how we got these targets is if we zoom out on a monthly time frame, we use our fibs once again, our regular fibs, mark our 2001 high to the 2008 low, and we got our impulsive fib targets for the 1.272 and 1.414 fibs, right around 134.7 to 141.85. Hide that. And if you zoom out even further, all the way back to the 80s even, if we mark our 1985 high for the DXY down to the 2009 low, there we go. And we got our golden pocket target in between 128.80 to 132.75, and our 0.72 target at 136.70. So with all these fib target confidences, we strongly believe that this is the area where DXY will top out and reverse back down, where we will see price action to the upside for Bitcoin and stocks as well, hopefully. So in conclusion, the key takeaways from this video are the following. The Federal Reserve's methods to handle inflation is not working at all, so prepare for a big market crash black swan event in the upcoming days. And this is a perfect timing for a market crash with the Shemita period that we explained to you briefly. Once again, watch our previous videos on the channel to learn more about how the Shemita works. And the most likely top for the DXY will be in between 128.8004 to 144.599. The S&P 500 will probably bottom around 2,413 to roughly 1904. And finally, Bitcoin will probably bottom in between 10,672 to 3,964. That's all for me. Thank you so much for your time and view. Leave a like, subscribe if you enjoyed the video, or a dislike if you didn't. Remember that none of this is financial advice, of course, it's only for educational and entertainment purposes. Please stay strong and stay safe in this rough macroeconomic period we're in right now. Have a wonderful day. Big Boss out.